Hello everyone and welcome back to the channel. Today, we're tackling a huge topic that so many of you have asked about: how to start investing. It might sound intimidating, but I promise by the end of this 10-minute video, you'll have a clear, step-by-step roadmap to get started with both stocks and a Roth IRA. We've got 15 steps to cover, so let's dive right in. Step 1. Understand your why. Why do you want to invest? Is it for retirement, a down payment on a house, or just to build wealth over time? Your why will be your biggest motivator and will guide your entire investment strategy. Take a moment to really think about this. Write it down somewhere you can see it. This is your foundation. Step 2. Get your financial house in order. Before you invest a single dollar, you need a solid financial base. This means creating a budget to understand where your money is going. You can't invest money you don't have. Track your income and expenses for a month. You might be surprised what you find. This step is crucial for identifying how much you can afford to invest consistently. Step 3. Pay off high-interest debt. I'm talking about credit card debt, personal loans, anything with an interest rate over 7 or 8%. The guaranteed return you get from paying off high-interest debt is almost always higher than the potential returns you'll get from the stock market. In the short term, it's like an instant, risk-free investment in yourself. Step 4. Build an emergency fund. Life is unpredictable. You need a safety net of 3 to 6 months worth of living expenses, saved in a high-yield savings account. This isn't your investment money, it's your life happens money. This fund ensures that if you have an unexpected expense, you won't have to sell your investments at a bad time. Step 5. Educate yourself on the basics. You don't need to be a Wall Street guru, but you should understand some fundamental concepts. Learn what a stock is. It's a piece of ownership in a company. Understand what an IRA is. It stands for Individual Retirement Arrangement, a special account with tax advantages. A Roth IRA, specifically, means you contribute with after-tax money, and your qualified withdrawals in retirement are tax-free. Also, learn about ETFs and index funds. These are baskets of stocks that provide instant diversification. Step 6. Choose your investment account. This is where you decide where your money will live. You have two main options we're focusing on today. First, a Roth IRA, which is fantastic for long-term retirement savings. And second, a standard taxable brokerage account, which is more flexible and can be used for any goal, not just retirement. You can, and many people do, have both. Step 7. Open your account. This is the big action step. You'll need to choose a brokerage firm. Think of a brokerage like a special bank for your investments. Great, reputable options for beginners include companies like Vanguard, Fidelity, or Charles Schwab. The process is simple and can be done online in about 15 minutes. You'll need your social security number and some basic personal information, just like opening a bank account. Step 8. Fund your account. Once your account is open, you need to put money into it. You can link your bank account and transfer a lump sum, or better yet, set up automatic, recurring transfers. This is where your budget from Step 2 comes in handy. Decide on an amount you can consistently contribute, whether it's $50 a month or $500. Consistency is key. Step 9. Understand your risk tolerance. How would you feel if your investments dropped by 20%? Your answer determines your risk tolerance. Generally, if you're younger and have a long time until retirement, you can afford to take on more risk for potentially higher returns. If you're closer to your goal, you might want a more conservative approach. Be honest with yourself. Step 10. Decide what to invest in. Okay, the money is in the account. Now what? For beginners, I almost always recommend starting with broad market, low-cost index funds or ETFs. For example, an S&P 500 index fund lets you invest in the 500 largest companies in the U.S. with a single purchase. It's diversified, low-cost, and has historically performed very well over the long term. Avoid the temptation to pick individual hot stocks. It's much riskier and often leads to worse results. Step 11. Place your first trade. This is the moment of truth. It's less scary than it sounds. Log into your brokerage account, search for the ticker symbol of the fund you chose. For example, VO is Vanguard's S&P 500 ETF. Then, you'll click Trade, enter the dollar amount you want to invest, and hit Buy. That's it. You are now officially an investor. Congratulations! It's a huge milestone. Step 12. Automate everything. The secret to successful long-term investing is to make it effortless. Set up automatic contributions from your bank to your brokerage account, and if your brokerage allows, set up automatic investments into your chosen funds. This strategy is called dollar cost averaging. You buy regularly, regardless of what the market is doing. This removes emotion from the equation and builds disciplined habits. Step 13. The power of patience and compounding. Now for the hardest part. Do nothing. Your job is to let your money work for you. Don't check your portfolio every day. Don't panic when the market goes down, because it will. And don't get greedy when it goes up. Investing is a long-term game. The magic happens through compound growth, where your returns start earning their own returns. It's a slow process at first, but it snowballs into massive wealth over decades. Step 14. Rebalance periodically, once a year or so. Take a look at your portfolio. Maybe your stocks have grown a lot and now make up a larger percentage of your portfolio than you initially wanted. Rebalancing just means selling a little of what did well and buying a little more of what didn't, to get back to your original target allocation. This helps you manage risk and essentially buy low and sell high in a disciplined way. Step 15. Keep learning and increase your contributions. Your journey doesn't end after your first investment. Stay curious, read books, watch educational videos, and stay informed. And as your income grows throughout your career, make it a priority to increase the amount you're investing. The more you can invest, and the earlier you do it, the faster you will reach your financial goals. And there you have it, 15 steps to go from zero to an empowered investor. We covered everything from setting your goals to making your first trade and staying the course. I know it's a lot of information, but you can do this. Just take it one step at a time. The most important thing is to start. Your future self will thank you for it. Thanks so much for watching. If you found this video helpful, please give it a thumbs up and consider subscribing for more content on personal finance and investing. Let me know in the comments which step you're currently on. See you in the next video.